Have you ever dreamed of becoming a real estate investor but didn't know where to start? Today, I'm going to share how I transitioned from being a healthcare professional to building a seven-figure real estate portfolio that funds a global lifestyle. Whether you're looking for financial freedom or the ability to live anywhere in the world, real estate investing might be your ticket. One thing that most people who follow me are concerned about is how to make a living once they make the jump. Fortunately, at this time, the US dollar is strong and so is the real estate market. So by investing in real estate, you could fund your lifestyle abroad, simplify your long-term visa process, and build wealth all at the same time. My name is Carl Pierre, and welcome to my channel where I share everything that I know about living globally and investing to afford it. My real estate investing started almost by accident. After graduation, my fraternity brothers and I faced a housing dilemma. Instead of renting, we pooled our resources together and bought a house, and this experience was eye-opening for me. It wasn't about just solving our immediate housing needs, it was also our first step into investing, and it was a new door that I was walking through. By buying this house, I actually learned what were the steps in the process of securing a mortgage. My parents owned our home, but I didn't participate in any of the processes to buy that home when they bought that home. I was only 4 years old. But this was the first time that I was involved in the transaction, from visiting the property to making the offer to getting the contract signed, putting down the initial deposit, then the other guys going through the mortgage processing component of things, all the way through the closing, setting up the home, furnishing it, getting our resources together, getting utilities turned on. All of these things were a first, right? Before that, I was living on the college campus. You didn't have to worry about getting utilities turned on or anything else. You just had to pay your tuition and your housing and boarding fees. So all of this was a first. And by seeing the process firsthand and actually seeing that this is something I could execute on my own, it really opened my eyes to the possibilities of more. So not only did we buy this house, but we were able to divide the house out and rent it out for a profit. And that got me thinking, well, if this could generate income for me relatively passively, in addition to my career as an X-ray tech and as a person who was owning and operating a staffing agency, I said, well, this is just another stream of income that I can tap in on. And by going through the experience, I really opened my eyes and opened my mind to the possibilities of more. Ultimately, I learned that we could get together and make something happen. This initial venture showed me the potential of real estate to provide both a home and an investment opportunity. So being able to live someplace while benefiting from owning that place. Today, you see people talk about that in the form of this term called house hacking. So transitioning from that first successful deal to creating a multi-million-dollar portfolio involved learning, adapting, and scaling my investment activities. I focused on understanding market trends, leveraging financing options, and diversifying into markets with higher rental yields. From buying multifamily homes in New York and Florida to investing in properties overseas, each step was calculated to maximize returns and also minimize risk. Here's how I did it. The very first property I bought on my own, I bought actually utilizing the FHA 203K loan. Now this loan is unique in that it allows you to buy a distressed home only using 3.5% down as a down payment. I've covered that video in that process years ago on this channel, so check out that link. It's a very old video for me, so be warned. But it covers the details and explains how I went about that process. But what's interesting about the 203K program is that it's very similar to the hard money lending program. So in 2009, when I bought that first property with me and my ex-wife at the time, we bought that property utilizing this loan program, again, expanding on this couch rental idea. And once you use the program once, you can't keep using it unless you meet certain qualifications, like you have to live over 100 miles away, change states, etc. So that wasn't going to satisfy my demand and my need to buy more properties in Long Island, New York. So in digging, attending seminars, and researching, I came across a private money lender. Actually, they're still in business, operating under the name of Asset-Based Lenders. They're out of Hoboken, New York. I've done many of deals with them. And I realized that their hard money loan program was structured exactly the same as the 203K loan program, meaning you identify the property, you get all of your bids in order so that you know exactly how much the real estate is going to demand in renovations. And you also have to forecast, what is this real estate going to be worth? And as long as all of those parameters are met, that you've got the budget, that the numbers work, they will lend you the money to buy the house and 100% of the money to repair the house, as long as you pay 10 to 20% into the deal itself, usually on the purchase side. So that got me looking for properties that fit that mold, right? In order to purchase a property, you either have to have all cash, or you have to find the deal that matches the lending parameters of some sort of lender. And in this case, these are specialized lenders that lend on distressed assets. So I started looking at all foreclosures, short sales, distressed properties, old ugly homes, and I didn't have the 20% to put down at the time. So what I ended up doing was, again, like the first house, let me go to friends, family, pool the resources together and get that 20% down. They became my initial investors in a small project. And the project was only like a $180,000 deal. The purchase price was $120,000 or $130,000. So I needed $25,000 in cash plus some float money, because remember, the lenders are going to reimburse you the money after the construction has been done. So either your contractor needs to front you the work and materials, or you need to. So the requirement was about $25,000 down, $30,000 down, plus you're gonna have your closing fees and other costs involved. And then I needed enough money to float construction. And since we were doing multiple draws, I wanted to have about a draw's worth of cash available. So that meant that I had to have around $70,000. So $10,000 from a friend, $20,000 from me, $10,000 from another. We pulled that money together, and they were going to benefit from the upside of when I sold that property to get their money back plus some profit point based on how much they invested. And if I didn't have that experience with my friends and my fraternity brothers, I wouldn't have thought to tap that again. And the reason why I'm sharing this is because a lot of people who go into investing in real estate, they're like, I want to invest, but I don't have 20%. I don't have 30% to put down. What am I going to do? How am I going to make this work? And the way that you make it work is that you find programs like the FHA program that only require 3.5% down, or you find alternative lenders and investors to help make your dream a reality. And this is what I teach in my program, Killing the American Dream, where I teach how to invest in 1 to 4 family real estate. The reason why I put that program together is because as I started to buy 4, 5, 10 properties a year, people saw the activity and thought, well, how are you doing this? So I decided I wanted to bundle it, all my experience, into one program and teach others how to do it. And the cool thing is you can invest alongside me in the deals that I'm doing. Like, for example, the deal that I'm doing in Sicily, that's a group investment. Me and you guys who watch me put our money together and bought a property in Sicily, renovated it, and are renting it now on Airbnb. These things are possible. So I really try to put myself out there to work alongside you and teach you to do the things that have enabled me to be successful in this real estate lane. And what my journey illustrates is that with the right strategies and mindset, anyone can scale their real estate investments to reach significant financial goals. Real estate isn't just about buying properties, it's about unlocking a lifestyle. For example, owning a duplex in Florida that's rented out as an Airbnb can generate substantial income, enough to sustain living expenses in a more affordable country like Mexico. Let's break it down using an example of buying a home with 3.5% down and leasing it on Airbnb for 2 years. Year 1 allows us to be in compliance with FHA regulations. It gives you insight into what 2 years can offer. Switching on over to my computer, let's show you exactly what I mean. So looking at this, in reality, I pulled up a location in Fort Lauderdale that I think has some potential. And what I like about this area is that it's extremely close to downtown and to the airport. And since it's close to downtown, or Los Olas Boulevard, you are able to get to the nightlife and to the beach quite simply. Or if you're a boater, you could get to the river quite simply and out to the sea. So here are some properties that I think are reasonably priced at $595,000, $550,000. These are duplexes, so they're 2 units. And what I like about them, like I said, is that they're in an area that's just west of US 1 that historically may not be the best. Like you could see, there's smaller homes, but downtown's expanding in all directions. And you're starting to see homes get kind of priced into the $1 million range. And that's because the neighborhood is changing and people are renovating homes, expanding them, making them larger, etc. But what I really like about these is that they have 2 units. So let's take a look at this property here. They're asking $595,000 for it. It looks staged fairly well as it is, and it looks like it'll be a comfortable place to be. And you could get, from my own experience, anywhere from about $100 to $150 a night for a 1-bedroom apartment here, and anywhere from $120 to $130 a night for a 2-bedroom apartment in this area. And it can be higher and slightly lower. Like in the low season, you may be getting $80 for a 1-bedroom and maybe $120 for a 2-bedroom. And that's like summer month, hurricane season. In the high season, you're going to get the numbers that I quoted, and that's from about November till May. Now let's look at how these numbers would play out. If you took $595,000 and only put down 3.5% at a 7% interest rate, you're looking at a monthly payment of around $5,400. Now let's do some math here. If you lived in one of the units, which is the 1-bedroom unit, obviously you're gonna get more money on your 2-bedroom, and you're getting an average of $150 a night times 30 nights times an occupancy rate of 0.8. That's 24 days rented a month. You're talking about $3,600 of income that unit would produce while you live in the other unit, okay? And if you were to take the difference of what your monthly payment would be of $5,400 and you subtract out the $3,600 for your Airbnb income fees, and that's not including your cleaning fees because you're going to charge more for your cleaning fees, you would be able to reduce your monthly expense to $1,800 a month while you own and live there. Now, if you were to rent a 1-bedroom apartment in the same area, but probably in downtown, you could get a similar 1-bedroom in a duplex like this, maybe for about $1,600 to $1,800. If you were downtown, that might be $1,800 to $2,100. So you'd be living at the same sort of price as renting while you own the home, and the majority of your mortgage payment is getting paid off by your Airbnb. But what happens when it's year 2 and you're allowed to move from the property? Because the FHA has a clause that says these are for owner-occupied homes, and that's why you need to live there for a year's time. Once the year passes, you're able to move out and rent out the full property. So if you're renting out the full property, you just saw that we'll be doing about $3,600 a month. And like I said, in peak season, you will be rented for the whole time, and you can even jack up prices. But let's just say that we just keep these average numbers. If your other unit was a 1-bedroom and you're renting that out for an average of $100 a night times 30 nights times your occupancy of 0.8 is going to give you $2,400 plus the original $3,600 takes you to $6,000. So assuming just debt coverage and debt service, you would be able to eke out some cash flow on a property like this of around $500 a month. Again, you could adjust your cleaning fees and your cost to ensure that you're able to maintain the property, pay the utilities that you have to cover, and generate more money. But what happens if this was a 2-bedroom duplex? Like each unit had two bedrooms, like one of the examples that are here on Zillow. If this property were configured as a 2-bedroom, 1-bath duplex, where there's two bed, one bath apartments in the duplex, you really stand to benefit. And that's what I would really try to zero in on. If you could find that property in the same price point, you would be making $3,600 per unit after you move out, for a total of $7,200 a month, which after you start to subtract out your mortgage of $5,500, you'd be left with $1,700 to cover any utilities that you'd be covering and to pocket for yourself. And I think in that situation, that would be the ideal thing to look for. A duplex near the beach, near downtown, that fits this price parameter and allows you to actually get this going. And you would end up probably walking away with around $1,200 a month or $1,100. And that one property spending you $1,100 a month could cover you for sure in parts of Mexico, parts of Latin America, maybe even in Mussomeli, Sicily. $1,100 a month as a single would certainly cover you for your living expenses, housing, and having enough money to go out. This approach has allowed me to live and travel freely, proving that strategic real estate investments can support a global lifestyle, whether you're supporting a family or just a solo nomadic traveler. If you're inspired to start your own journey in real estate investing and want to learn exactly how I built out my portfolio, check out my course, Killing the American Dream. Like I said before, I invest alongside my students in promising deals, offering hands-on experience. You can visit my website to sign up and start transforming your financial future today. I'm going to include a link down below as well. With my guidance, we can turn your real estate aspirations into reality, allowing you to live globally and invest globally. I think investing in the US really gives you good opportunities for cash flow, and internationally gives you that opportunity to be anywhere in the world. If you want to see exactly how I approach group investing, check out this video right here where I took on a project with my friends and some followers. Just more information to make your dreams of living globally a reality.